Traders, FX Pip Collector here. Today is Saturday, August 3rd, and this is the Saturday video I like to do that kind of covers all the pairs that I do analyze on a daily basis for my premium members. We're going to start at the S&P 500 and work our way up, but I do cover these pairs down here too, including all these indices, Bitcoin and Ethereum. But anyways, yeah, we're gonna start at the S&P 500. We're gonna work our way all the way up to the dollar pairs, the more popular pairs. We're only gonna be looking at the daily time frame because for me, the daily time frame is my roadmap. If I know what the daily time frame, my roadmap time frame is doing, then I will have a very, very good idea of what to do on these sort of time frames. Without your roadmap, you will be very lost. The same applies if I dropped you off in some random city, and the same applies if you are a trader. Without your roadmap, you would not have a clue what to do. So we're going to start off at the bottom on the S&P 500, work our way all the way up to the top. And if anybody is interested in checking out my membership, it is very, very cheap. It is only $30 a month. And I like to call it learn and earn at the same time because hopefully while you're learning by following along with my trading course and attending my live daily Zoom meetings that I do every single weekday, hopefully while you're learning to trade you can earn because I do share every single swing trade I take with the group at the time of entry with stop loss and everything. So hopefully while you're learning you can earn and follow along with some of the trades that I take. I don't really intend it to be a full-blown signal service, but it's just one trader telling other traders, hey, I'm getting in this trade. This is my stop loss. If you would like to get in with me, then here you go. So anyways, let's start. The S&P 500, I got my Fibonacci retracement on this last push up right here. I actually still think that we're in a wave 3 on the weekly monthly, so I'm definitely still very bullish overall. I think we're just in a crescent to the last 5 waves up right here, which is actually a very, very clear 5 waves. So I'm watching these Fibonacci levels very, very closely. I do think that one of these 3 Fibonacci levels is definitely going to get respected. I think on the shorter time frames, you should be able to see a double bottom 3, 4, 5 shape with a breaker structure, and if you do see that, then I would definitely stop looking for shorts and start looking for longs. But as of right now, the trend is definitely down as you can see, and I'm definitely looking for shorts on sort of time frames. It easily could stretch out to one of these lower fib levels, and we don't really know for sure. I mean, it always could go down and break structure. So I'm definitely looking for shorts on shorter time frames. Natural gas. Natural gas, I traded this several times this week, and I did share every single one of those entries with my members at the time of entry. Very, very profitable trades this last week. Now, it definitely does kind of have that 3, 4, 5 shape right here, 3, 4, 5 shape right here, and we are sitting at a 78% Fibonacci level. Could end up being a pretty decent area of resistance, but I still think there's a pretty good chance that it is going to break this low right here. The question is it going to make a significant correction before it breaks that low, or is it just going to keep on making lower lows, lower highs? We don't really know the answer to that, so I'm just going to continue to look for shorts on sort of time frames at least until I get a break of structure, which I think right now the most recent structure is right there for me. So definitely looking for shorts at least until we get a break of that structure right there on shorter time frames. Moving on to oil. Oil was another one that we sorted several times this week. Now, I do still suspect that oil could eventually go up to about the $100 a barrel, but it is going down pretty strong and it is trying to close below the 78%, and we don't really know that this is a wave 2. We do not know that this may not end up doing something like this. I suspect that it still could respect the 78%. It still could pull back and go up and break structure. But you know what? I am definitely trading with the trend, which means I'm looking for pullback entries to go short on shorter time frames. If it just keeps on stretching out, then okay, fine, it just keeps on stretching out. This right here is definitely 5 waves, and this is definitely a crescent to that 5 waves, so it probably is pretty likely at this point it will take out these previous lows and maybe even go down and take out these lows. And that doesn't bother me any because I will be looking for shorts on shorter time frames. Moving on to gold. On gold, I actually have a couple Fibonacci levels that line up really well. I got the 161.8, which is the monthly time frame Fibonacci extension, which is right around 2540. And then if I go down to the daily time frame, I got the 61.8% Fibonacci, which is the 2550. So these Fibonacci levels line up really, really well, which makes me think that it is very, very likely to go up there and touch that higher Fib level, probably the 61.8. I definitely still think this is all subdivisions of a wave 3. I think that this is all one of 3. 2 of 3, 3 of 3, 4 of 3, and we're now in a 1, 2, 3, 4, 5 of wave 5. So based on all that, I'm definitely looking for pullback entries to go long on shorter time frames. Moving on to the Swiss, man, the Swiss pairs just took off this week. It is very, very obvious that this is a 1, 2, 3, which means that even if it does start a pullback, it's probably going to need to make a wave 4 and a wave 5. So definitely looking for shorts on all the Swiss pairs. I mean, like I said, I can almost guarantee that even if this does make a pullback, that it is almost definitely going to have to make another wave down. And it may not even do that. It may just be a subdivision of a much bigger downtrend. So we are definitely looking for shorts on pullbacks on really all the Swiss pairs. Kiwi Swiss, same type of thing. I do kind of suspect the Kiwi Swiss is a wave 5 on the monthly, but just like the CAD Swiss, 1, 2, and definitely wave 3. No reason to think the wave 3 is over. It just blew past the Fibonacci level, so I would definitely expect it to go down to at least the next Fib level and maybe even beyond. The trend is your friend. We're not really trying to identify tops and bottoms. We're just looking for continuation patterns on shorter time frames. The market will tell you when a trend is over, and this trend right here is definitely not over. Definitely looking for shorts on shorter time frames. So the Kiwi CAD, to be honest with you, I actually don't trade the Kiwi CAD or the Kiwi Swiss, so I do kind of neglect them a little bit, but I do have my Fibonacci level on this move right here. Now, I do kind of see this right here as 5 waves, 1, 2, 3, 4, 5, and I do see that this did make 3 waves down with a very significant turn with a higher low, higher low. So the fact that it made 3 waves down and the fact that this is 5 waves up makes me think that this is actually now back into the uptrend and it's probably likely to continue to make higher highs, higher lows. I got my Fibonacci retracement on here just to look for areas of resistance because that probably will be areas where you will see pullbacks, but definitely looking for logs on shorter time frames. Going down to the Kiwi, I was originally thinking the Aussie Kiwi was going to go up a little bit more, but boy, it definitely broke structure to the downside in a big way. I definitely think the wave C is over with how it broke structure, and I definitely would be looking for shorts on shorter time frames. At this point, I would expect it to probably take out both of these lows, not all at once, obviously, but over the course of several weeks, which is great news for us because we should primarily be looking for shorts probably for at least the next several weeks. Moving on to the Aussie Swiss, just like the other Swiss pairs, very clearly a 1, 2, 3. Definitely no reason to think the wave 3 is over, and definitely looking for shorts on shorter time frames. Man, you would have made some money if you would have gone short on any of these Swiss pairs this week, that's for sure. So moving on to the Aussie CAD and the Aussie dollar, and really the Aussie Swiss, they all kind of look like they could try to turn up at some point. They definitely look like a 3-3-5 pattern: 1, 2, 3 waves down, 1, 2, 3 waves up, and then 5 waves down. Higher high wave B, lower low wave C. It definitely still looks like an expanding flat to me. But the only thing that's going to turn me into a buyer is seeing price go up and seeing price break structure. Until I actually see this picture right here, I am not looking for buys. I'm looking for sells on shorter time frames. We don't know that it's going to go up and break structure. It could easily make a lower high and just go all the way down to a lower Fibonacci level, or maybe it could even go down and break these lows. The trend is your friend. Like I said, we're not trying to identify tops and bottoms. We're looking for continuation patterns. The market will tell you when a trend is over if you know how to tune the frequency of your time frames and structure and LA wave analysis, which is all what I teach in my trading course and my live Zoom meetings that I do every single day. Moving on to the pound Kiwi, I definitely think that all these Kiwi Aussie cross pairs are still going to go up. The pound Kiwi, the pound Aussie, the Yo Aussie, and the Yo Kiwi. I still think they're all going to continue the uptrend. I got my Fibonacci retracement on here. This move down is very strong, which I would kind of expect to see some sort of a three-way pullback. I don't think it's just going to suit up now. I think it needs to make some sort of a three-way pullback before it does suit up. So I definitely would be looking for shorts on shorter time frames, but I would also keep in mind that this is very likely a correction to the uptrend, which means that at some point you will get 3 waves down, you will get a break on to the upside, and you will have to stop looking for shorts and start looking for longs again. Moving on to the pound Aussie. The pound Aussie is the same story, except for the pound Aussie really didn't even break structure. I mean, it tried to break structure, but actually it rejected structure. I would keep an eye out just in case it did make a lower high on shorter time frames, because technically it did break structure, so I would keep an eye out for a lower high, possibly a short. But I would definitely still primarily be looking for longs because this is definitely an uptrend and it definitely has not broken to the downside to prove the trend is over, and it easily could just keep on going up. Like I said, the trend is your friend. Until the trend is proven to be over, we need to trade with the trend. Moving on to the pound Swiss. The pound Swiss, just like the other Swiss pairs, I definitely would look at this as a 1, 2, 3. This one is not quite as strong to the downside as some of the other ones, so I would pay attention to the 78% that's going to come up. If it does make a double bottom there with a break of sorts, I would definitely get out of sorts, and I would definitely stop looking for sorts. But until I see that picture, I'm only looking for longs, and I'm only going to go long on sort of time frames at pullback entries. So definitely looking for pullback entries to go short on this one. Pound CAD, we did go down and we did break structure this week, but it rejected structure. It bounced off to 38%. Kind of like the pound, what is it, pound Aussie I was just showing you. I would definitely keep an eye out for a lower high in the sort of time frames, just in case it does decide to make a lower high and turn back down. But the trend is definitely up, and I honestly think it's more likely that it will keep on going up. So I definitely am looking for longs on pullbacks on sort of time frames. So the Yo Kiwi, man, the Yo, I don't know what got into the Yo on Friday, but the Yo pairs are extremely strong. I honestly wouldn't be surprised. I mean, the trend is definitely up on this. I wouldn't be surprised if it just kept on drifting up. So I definitely would be looking for pullbacks on the Yo Kiwi and the Yo Aussie, man. Look at the Yo Aussie. There is no reason at all to think this is over. I mean, we are coming up to a previous support level, and there's a couple of support levels up here. Maybe that will be an area of resistance that causes pullbacks. But for me, pullbacks, I do not sort them, but pullbacks always make me excited because I know that at the end of a pullback, I will be able to go long again for the continuation of the uptrend. I am not a scalper, and I'm really not much of a day trader. I'm more of a swing trader. So for me, like I said, I don't trade pullbacks to the short side, but I'd much rather just be patiently waiting for more long opportunities. Moving on to the Euro Pound broke the wave 4 high this week, which pretty much proves to me this whole trend is over. So I think actually the trend actually starts way up here, I'm sorry. So this whole trend right here is proven to be over. Now that doesn't mean that it's a trend reversal and it just needs to go up and break this high up here. It doesn't mean that. It just means that this whole series of waves right here is over, which means that it's either now going to make an ABC correction to the downtrend, or it really is a trend reversal and it's just going to keep on going up. Either way, we should be in for a pretty strong move. I think there's a very good chance it will break this high eventually, so I definitely would be looking for longs on shorter time frames. Yo Swiss, man, even though the Yo is very strong, the Swiss definitely is still pushing it down really hard. We are closing below the 78% too, which is usually a good sign that it's going to keep on going. So I definitely would be looking for sorts of time frames on the Euro Swiss. Probably more likely it's a 1, 2, 3, just like most of the other Swiss pairs. Moving on to the EURUSD. The EURUSD is another one where it did break structure this week, but it rejected structure. A lot of times when you see a rejection of structure, that's actually a really good indication that the market's going to keep on going in its original direction. These rejections of structures are really just liquidity grabs for big money traders. So when you see these rejections of structure, it's usually a pretty good opportunity to continue to trade with the trend. I would keep an eye out for this 105 area because it is still possible that it's a wave C or B on the on the like weekly, monthly time frames, but we definitely don't know that to be true. And honestly, with how strong the Yo is right now, I think there's a pretty good chance it might just keep on going. Definitely looking for longs on time frames. Now, moving on to the yen pairs. Now, the yen pairs I do kind of analyze really fast because, I mean, the thing I like about the yen pairs, I always tell people in my group that I think the yen pairs are actually the easiest pairs to trade because all these yen pairs, all 7 of these yen pairs are so correlated. They're almost always doing exactly the same type of pattern, just a little bit of a different shape. So all the yen pairs I personally think are some of the easiest Forex pairs to trade because they're so correlated with each other. I think that we are very likely in a wave A right now, which is wave A of wave 4 on every single one of these yen pairs, including the dollar yen's a little bit different, but still the dollar yen is doing something very similar. I definitely do not see any reason to think this is over, and I honestly think there's probably a pretty good chance it's going to go down quite a bit more. I think it's probably more likely to go down to these lows or maybe even these lows before we actually do get the end of this wave A. So I definitely would be looking for pullback entries to go short on every single yen pair. Look at the CAD yen. Boy, that thing is just cranking. No reason to think it's over. No break of structure, no higher low. I would be doing nothing but looking for shorts. I definitely think it's a wave 4 of wave A or wave A of wave 4 on the weekly monthly time frame. And I also suspect that this wave 4 on every single one of these yen pairs is going to last probably about 8 months. I do not think this wave 4 will be over until probably about spring 2025. Now, that doesn't mean it's just going to keep on shooting down like that, but on the weekly, monthly time frames, I definitely would expect to see something like this that would probably last about 6 to 8 months. So definitely continuing to look for shorts on every single yen pair. We're in a wave A of wave 4 on every single one of these. The strategy on the yen pairs is so simple, just looking for pullback entries. If you've been watching my videos for a while, you probably heard me for about 6 months straight say that I'm only looking for longs on yen pairs and I'm only looking to go long on pullbacks. Now you're probably going to hear me for about 6 months straight say I'm only looking for shorts on yen pairs and I'm only looking to go short on pullbacks. So the strategy on every single one of these is exactly the same. I think we're in a wave A of wave 4, and until I see something like this, I am doing nothing but looking for shorts on all the yen pairs. Now the dollar yen is a little bit different because the dollar yen actually looks like a wave 5. It definitely looks like a 1, 2, 3, 4, 5 too. So it looks like a 3, a 4, and then a 5, and then even the wave 5 looks like it has 5 waves. So it is a little bit different, but it's pretty much the same strategy. We are definitely in a downtrend, which is either a wave A or possibly a wave 1, until we actually see something like this, which I don't think is going to happen until we get to the low of wave 4, because that's usually where wave A and a wave 1N is around the low of a wave 4 or the high of a wave B, or like if this was an uptrend, like a low of a wave B is also a really likely area for a wave A or a wave 1 to end. But long story short, until I actually see this picture right here, I'm doing nothing but looking for shorts on shorter time frames at pullback entries. So moving on to the dollar pairs, probably the more popular pairs. Man, anybody short the dollar Swiss this week or any of the Swiss pairs? Definitely in a wave 3. There's no doubt about that in my mind. I do think it's going to take out these lows and probably go a lot lower than that. I think I've had this as the end of a wave C for probably at least a month or so now. So, I mean, it's doing exactly like we planned it to do, which is trend down, lower lows, lower highs. We are currently in a wave 3 right now, and I definitely do not think it's over. I definitely think it will take out these lows. It's not just going to continue to shoot down like that. There's definitely going to be pullback entries. There's definitely going to be pullbacks, especially visible on shorter time frames, which, like I said, I don't go long on pullbacks. In a downtrend, I would never go long on a pullback, but pullbacks do make me very excited because I know at the end of pullbacks, just like these ones right here, I can go short again for the continuation of this downtrend. So moving on to the US dollar CAD. The US dollar CAD has not broken structure to the downside yet, but I still think that there's a very good chance that it probably is going to break down at some point. But the trend is your friend, so guess what I'm doing? Even though I suspect that this could happen maybe this week, what am I doing on shorter time frames? I'm looking for longs. And if it just keeps on going up and I'm wrong about this being a wave C and I'm looking for longs on shorter time frames, is that going to cause any issues? If anything, I'll just make more money. On the other hand, if I'm right about it being a wave C and it turns down and breaks structure, then I'm going to stop looking for longs and start looking for shorts. I am a huge fan of trend following. I think trend following is by far the most easiest, most consistent way to make money in these markets. The trend is your friend. I'm not trying to identify tops and bottoms. I'm just looking for continuation patterns. Top and bottom feeders are usually the ones that lose a lot of money in these markets. Moving on to the Kiwi dollar. I think the Kiwi dollar is possibly trying to end the wave C2, but I think there's a chance that we may actually push down again because it definitely does look like a 1, 2, 3. Looks like it could be a wave 4 and it might push down again for a wave 5. But it doesn't have to push down like that. It might possibly push down a little, but it might make a higher low and just keep on going up. I think I would be looking for longs on shorter time frames, definitely. And if it really is an ABC, then not only is it going to take out this high, but it's probably also eventually going to take out that high. So potentially, we have a lot of upside potential on all these pairs. And if you've been watching my videos, then you know my higher time frame analysis for the euro, the pound, and the Aussie has them going up for lots and lots of pips. So we got three more pairs to look at. We got the Aussie dollar, the pound dollar, and the euro dollar. Probably some of the more popular pairs besides gold. Maybe I think gold is pretty popular also. So, but if anybody does want to check out my membership, like I said, it is only $30 a month. It's extremely, extremely cheap, especially compared for what I do for my members. I do a Zoom meeting every single weekday in the New York session, which is about 2 hours long. It comes with a trading course included free in the membership, which is about 35 videos, 7.5 hours of video course. And I like to call it learn and earn at the same time, because while you are learning to trade by taking my trading course and attending my live Zoom meetings, which the live Zoom meetings is all about, live analysis, live teaching, and live trading. While you're learning, hopefully you can earn by following along with my swing trade setups. Every single trade I take, except for maybe a couple news entries, which the news entries that you will be able to participate in if you're in my live Zoom meetings. But every single swing trade I take, I tell my group at the time of entry with stop loss. And I tell you when I'm getting out of the trade also. I don't really use take profits. I'm not really a big believer in take profits. I think the market will tell you when it's time to get out of a trade. So anyways, moving on to the Aussie dollar, just like the Aussie CAD, I actually still think there's a very good chance this is three waves down. One, two, three waves up, and five waves down. A 3-3-5 pattern is a very, very recognizable pattern in Elliot wave terms, which is a B, and a C. Higher high wave B, lower low wave C, that's an expanding flat. Now, I definitely suspect that this is going to go up, and I think it's going to break structure at some point next week. But because I don't know whether it's going to happen, when it's going to happen, or whether it's going to happen now, I mean, it could possibly drift down more. Most expanding flats actually do go to the 261, 278%. So, I mean, it definitely could drift down more. So, since we don't know anything, and the fact that you need to admit that you don't know anything about these markets, which is why I think it's so important that you just follow the trend. Guess what? The trend is down right now. Until we break structure to the upside, the trend is down. I'm actually short on the Aussie dollar right now. I'm actually been short several times from last week. If it goes up and breaks structure, then I'll stop looking for shorts and I'll start looking for longs on pullbacks. If it doesn't break structure, then guess what? I'm going to continue to trade with the trend, because the trend is my friend. The more you trade with the trend, I think the more consistently profitable you are going to be. I am definitely still looking for shorts on shorter time frames unless it does this. If it does that, then I definitely will be looking for longs on shorter time frames. Moving on to the pound dollar, boy, the pound dollar made a pretty good bounce also, but we had pound interest rate news for this last week for the pound, and that pound has been pretty weak ever since that news. So we definitely don't have a breaker structure to the upside yet on the pound either. Which, guess what? That means I'm still looking for shorts on shorter time frames. I don't know that this is going to go up. I definitely suspect that it's going to go up. I think it's going to go up. I think we're already in a wave 3 on the weekly monthly time frame. So I do suspect that it is going to turn up. But I don't know that it's going to turn up. It possibly could go down again. So guess what? I'm looking for shorts on shorter time frames until I see that break of structure, which I definitely do not see yet. And the daily time frame is definitely not really the best time frame to be looking for this break of structure anyways. It's a little bit short of a time frame, like the 8 to 12 hour time frame, I think is where the market is tuned correctly. A lot of people study Elliott wave, and I noticed that almost nobody talks about tuning the frequency of your charts. Elliott wave really only works really well when you tune the frequency of your charts, which is what my mentor taught me to do, and which is what I teach my students to do. Nobody in the Elliott wave world talks about this, but I think that that's the missing key to Elliott wave. And that is the reason why a lot of people say Elliott wave does not work, because they do not understand the concept of tuning the frequency of your charts. My old mentor used to refer to it as an FM radio. If you're trying to listen to a radio station and you're trying to listen to like 96.5, you're trying to listen to the music. If you tune it to 96.7, you're still going to hear the music, but it's going to be staticky. It's going to be hard to listen to. If you tune it to 96.3, you're still going to hear the music, but it's going to be hard to listen to. It's going to be hard to understand. Same exact thing applies to these time frames up here. If you're not on the right time frame, it's going to be hard to get an accurate Elliott wave count on these patterns. If you are tuned to the right time frame, then you're going to be able to count these waves. You're going to know when a trend is over. You're not going to have to guess when a trend is over. You're going to know when a trend is over, and you can just go with the flow and just keep on following the market, trading on pullbacks. So the euro dollar broke up in a crazy way, huh? The euro was actually already very, very strong before the US dollar news came out. The non-farm payroll came out on Friday. So before the news even came out, the euro was very strong. And then the news came out, and the US dollar was very, very weak from the news. So we had a weak dollar versus a strong euro. Weak versus strong is exactly what we want in these markets, because that's what happens when you have weak versus strong. You get a big, big push up. Hopefully this is really the end of a correction, and if you've seen my full top-down analysis, you know where my higher time frame targets are. I still think we're in a wave 3, and I still think there's a very, very good likelihood this is just going to keep on going up, making higher highs, higher lows. I am 100% looking for longs on shorter time frames, and I'm looking to get long on every single pullback I see. The trend is your friend. I know that's something you would probably read out of an 80s trading book, but there's a reason why those guys in the 80s made so much money, because they understood the trend is your friend. So anyways, also don't forget to join my free Discord group. We have 5,308 members in my Discord group right now. It's 100% free to join. If you do not want to join my website, that's fine. The website is only $30 a month. It is very, very cheap, and you can actually cancel at any time, so if you're not satisfied, but I definitely think you will be satisfied. In the past 2 weeks, combined, I've made about 7 or 8% between the last 2 weeks, so definitely pretty profitable a couple weeks. And every single trade that I take, I share with my group at the time of entry. So any trade that I get in, you potentially could get in too at the exact same time I get in. So anyways, definitely don't forget to check out my free Discord channel. The link for that is in the description of this video. And as always, thank you and enjoy the rest of your weekend.